Good morning, trading world. It is January 9th, 2023, the second trading week of the new year. And this is my pre-market outlook and technical analysis for day trading the markets. The title of this morning's outlook: Bulls leading the way, but will they be led to their own slaughter? Coming into the first week of the year, I tried to prepare you for volatile swings that are going to take place. We were also oversold to a great amount, so a coming bounce is almost inevitable. Also, due to the amount of open interest built up over the last couple of weeks, as you can see here, just kind of swinging back and forth in pretty much the same range, we are definitely due for a big move. Now, this is going to be a weird time in the market because technically the market wants to bounce. Hell, it needs to bounce. But the undercurrents are so bad that it leaves me thinking, is it even possible to bounce? I gave you the analogy of a mean dog on a chain, and that still holds true, because we are in the middle of a momentum shift where larger time frames are fighting for control. My guess is that we move sideways to up with a few failed breakouts that take us deep into February. We will see some good tries to break out to the upside, but what is super important is to know what is on the horizon. What you may know is that I do projections for the intraday and weekly time frames. You may not have noticed, but I also do projections for the month and current year. We are headed to an amazing alignment where we will soon be in an alignment where we will be overbought in all projections, the yearly, the monthly, and the weekly. Overbought zone projections for the year I have as 393 all the way up to 414. For the month, the current month of January, they are 385 to 392. And this current week, it's 389 to 391. What I see happening is that the monthly and weekly projections steadily rise until they are firmly inside the yearly projections before we get a huge reversal where we see some 3 to 7% down days. I say all this to prepare you not to get too excited about the rips and rallies coming over the following days and weeks. So, for now, this current week's outlook is bearish. Looking for a close below 388.08 with a possible retracement back down to 382. We do have dissonance on the weekly outlook between the quant side, which is bearish, and the technical side, which is bullish. This brings us to the key levels to watch for today. Give me just a moment to bring those up. All right, here we are back with the key levels of the day. Starting on the resistance side, we can see our jack resistance is 389 to 390, which should be pretty formidable today. Then we have our queen resistance 391 to 392, which I don't really see us breaking through that level today. And then we have our king resistance level at 393 all the way up to 397, which is our main channel, the close to the upper end of our main channel that we're in. Now, on the support side, we have our jack support at 388 to the 387 area. Queen support 386 to the 385 area, which we should spend some time around. And then king support 384 to the 380 area. The main thesis for today is bearish, closing below the 388.08 with a projected target low of between 387 and 382. The alternate thesis is bullish, closing above the 388.08 with a projected target high of between 388 and 392. The main channel we are in is from 379 up to 397. The main channel above that is 397 up to 416, I believe. And just to be aware, although I don't think it will happen today, or we shouldn't get an extended period down there, but let me go make sure. Just to make you aware, the channel below where we are would be 379 all the way down to 364. Now, as of Friday, market strength and breadth gapped up and had a brief drop early in the day, but went back up and stayed really high the rest of the day. This gives me reason to look for a pullback today or over the next 2 days, with us treading water and trying to push higher thereafter. We have somewhat of dissonance between the technical side, which is bullish, and the quant side, which is bearish. This brings us to the scenarios of the day. Give me just a moment while I bring those up. All right, here we are with our first and most probable scenario, which is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area, find midday chop around either the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. This is our rounded reversal day type structure. All right, here we are with scenario number 2, which is our expanded range structure. We could have an initial grind up and then drop before testing support and deciding to start the grind up again. So again, this is our expanded range day, slight grind up to start the day before reversing and dropping down and finding support somewhere and starting that grind up again. All right, and our last scenario is our trend day up. We open gap up, start with a fade back toward the previous close, represented by the blue line. We find support on or before that previous close, then begin the trend day up for the day, better known as our golden window, the best time of day to trade. We usually find midday chop around either the possible queen or king resistance area. Not always, but a lot lot of the times on these trend days, we start off the second day looking to continue the primary trend, but it's usually a head fake, and at some point we get kind of a fade back toward back down closer toward the close of the day. So those are the scenarios that I will be looking at or planning for today. As always, your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. Again, I hope this helps. Hoping this gives you the tools to go out and have a positive trading day. Let's go out and make it a great one.